Good morning and welcome to the virtual IMF press conference on regional economic outlook for Sub-Saharan Africa. My name is Gediminas Vilkas and I am with IMF Communications Department. I'm very pleased to introduce you Mr. Abebe Amro Selassie, who is the IMF Director for African Department. He will give an opening remarks and then we'll have time for questions. Now, thank you very much for submitting your questions online. Just reminding that you have two options how to do that. You can do it through IMF Press Center, just sending a message to us, or you can do it live yourself through WebEx video platform. Just raise your the hand there and somebody will come back to you for the questions. So without further ado, I give the floor to Abe. Please go ahead.
Thank you, Gediminas. Good morning from Washington. Thank you all for joining us today for the release of our October Regional Economic Outlook for Sub-Saharan Africa. I would like to use this opportunity to provide you with an update on how the COVID-19 crisis is impacting the region, the economic outlook, and the policy challenges that we see for the coming months. On the health side, the onset of the pandemic was delayed in Sub-Saharan Africa, and infection rates have been relatively low compared to other parts of the world. But limited testing could be masking the true scale of the pandemic. And like many others, our view is that there is absolutely no scope for complacency in dealing with this pandemic. For one, the overall low numbers mask quite a bit of variation in how the pandemic is unfolding in the region. While many countries are past the infection peaks, others have seen a recent surge in the number of cases in recent weeks. And indeed, the resurgence of new cases in many advanced countries and the specter of repeated outbreaks across the region suggests that the pandemic will be likely with us for some time, and so is something to continue to be treated with quite a bit of vigilance. And again, notwithstanding the overall good outcomes, we see no room for complacency in this area. On the economic front, as we've been reporting for the last several months, the pandemic really has been quite devastating to the region. In just a few months, the crisis has jeopardized years of hard-won development gains and upended the lives and livelihoods of millions of people in the region. Regional activity dropped abruptly and quite sharply in the second quarter. In more recent weeks, we've seen a cautious reopening of economies and more of a forward-looking policy posture to ignite growth. And with the loosening of containment measures, somewhat higher commodity prices, and the easing of financial conditions, there are tentative signs of a recovery in the second half of 2020. Overall, our growth expectation this year is broadly unchanged from June. We expect economic activity for Sub-Saharan Africa to contract by 3% this year. No country has remained untouched by the crisis. The largest impact on growth this year will be on tourism-dependent economies, but oil-exporting countries in the region, other commodity-intensive countries, have also been hit hard. And growth, even in the more diversified economies, will also be significantly impacted this year. For 2021, we do expect a recovery, albeit modest, with growth accelerating to about 3.1%. And beyond that, we expect the recovery to be quite gradual and fairly uneven. The entire region is not expected to return to its 29 level of output until 2022. And for some of the region's largest economies, real GDP will not come back to the pre-crisis level until 2023 or 2024. And this growth will translate into quite significant decline in standard of living as measured by real per capita GDP. Over 2021, a contraction of around 5%, which is significantly larger than most other parts of the world. On policies going forward, policymakers face quite difficult trade-offs. Where the pandemic continues to linger, the priority remains, of course, to save lives and protect livelihoods. And for countries where the pandemic is under more control, using fiscal and monetary policy to support the recovery has to be balanced with the need to keep an eye on debt sustainability and external stability. Financial regulation and supervision needs to help crisis-affected banks and firms, but without compromising, of course, the financial system's ability to support long-term growth. Navigating this complex policy challenge will not be easy and will require continued external financial support. Without further external assistance, many countries will struggle to maintain macroeconomic stability while meeting the basic needs of their people. Indeed, Sub-Saharan Africa faces significant financing gaps. Much will depend on how private financing flows behave, but if they were to remain below pre-crisis levels, they're likely to remain below pre-crisis levels, and even taking into account existing commitments from international financial institutions and official bilateral creditors, the region could face a gap of as much as $290 billion between 2020 and 2023. For our part, the IMF has moved swiftly and dispersed about $17 billion so far in 2020, about more than 10 times the normal amount we disperse each year. And this money, of course, has been intended to cover the region's near-term needs and to catalyze additional support from the rest of the international community. Private financing conditions continue to remain strained. As in many other emerging market countries, the region has seen quite a lot of capital outflows at the onset of the crisis, and unlike other parts of the world, capital has been very slow to return. We are seeing some signs of return of private capital flows, but nowhere near the levels of previous years. Closing this financing gap will require a combination of additional concessional financing, timely debt relief in those countries where debt is unsustainable, and transformative reforms to attract private investment. I want to stress that, despite the crisis, the potential of the region and the resourcefulness of African people remains intact and should enable recovery and development gains in the long run. Tapping this potential will be vital for the region to find its way back to a path of sustainable and more inclusive development. Priority reform areas in the coming months include domestic revenue mobilization, promoting digitalization, facilitating greater trade integration, fostering competitiveness, and climate change mitigation investments. Alongside, of course, countries need to continue to improve governance, improve transparency, and facilitate better private investment conditions to engender a strong recovery. None of this will be easy, but I know from my conversations with policymakers in the region in recent days that most, if not all, are committed to working diligently to tackle these reforms. Thank you for your attention, and I'm happy to try and answer your questions.
Thank you very much, Abi. So now we are going to the Q&A session, and we'll be joined through WebEx by Joe Bavia from Reuters with his question. Joe, can you hear us?
Yes, can you hear me?
Yes, we can hear you. Please go ahead, Joe.
I had a couple questions related to the forecast of an external financing gap. And it's mainly, are multilaterals, I know you've talked about what the IMF has done, we know what the World Bank has done, are multilateral and bilateral lenders and donors doing enough on this front to head off what could be quite a serious problem? And if not, what more could they do? And For private lenders, what role might they have to play? And finally, what are the real life ramifications if the gap isn't plugged?
Thank you. So, the aggregate numbers we speak about this 290 billion that we see over the next 3 years, it's important that we are building that from country by country estimates. And we're in such a period of uncertainty that, those numbers are subject to quite a bit of uncertainty. Whether that number materializes or a lower number will depend on how private flows evolve in the coming months, and I'm sure they will vary from country to country. But overall, what we do see is really a very strong concerted effort by countries to, of course, promote the scope for private investment, and a stepped up effort by all international financial institutions. This includes the MDBs, us, and others, to support countries in the event that private flows do not materialize. The form of flows will depend greatly on the country's debt-bearing capacity, whether debt is sustainable or not. So there's a lot of factors that will be at play, but in the absence of this kind of support to countries, of course, what will happen is that there will be excessive adjustment, less investment and consumption in the countries, which would be, of course, detrimental to the strong recovery that we want to see in countries.
Thank you, Abe. The next question comes from Mario Bautista from Lusa News Agency. He is also joining us through WebEx. So Mario, go ahead.
Hi, thank you for having me. My first question is about Zambia. Do you think that Zambia's default that was decided by Standard & Poor's last night might have an impact on the whole debt question in the region? Because if there are no African countries seeking private debt relief, do you worry that they will use the DSSI to service that debt instead of using it to strengthen their health systems? And also, I have another question. It was about the number of the 290 billion. But since you've already answered that, I will ask you another question regarding Mozambique. Do you believe that the attacks on the northern province of Cabo Delgado in Mozambique might act as a deterrent to foreign investment and therefore hurt the macroeconomic stability of the country? Because there are reports that the terrorist group, has extended its operations to Tanzania and also the Democratic Republic of Congo. Might this turn into a regional concern that affects the macroeconomic stability of the Southern Africa region? Thank you.
Thanks. On Zambia, even before the pandemic and the economic crisis that it has brought about in the region and elsewhere, countries' debt was on an unsustainable trajectory. I think it's been well known, and we've seen also markets differentiating between Zambian assets and other classes of assets. I hope that will continue to be the case going forward. That not all African countries are treated in the same bucket, but there is differentiation on the basis of levels of debt, of course, but also policy trajectories going forward. That's what we're seeing so far, and I hope that will continue to be the case, as is the case elsewhere. Countries that have not sought relief from the private sector and the juxtaposition with the DSSI, we've been, I think, on the record repeatedly saying that, countries do need this breathing space. That's why Kristalina and David Malpass pushed so strongly for official sector creditors to do what they can. We've continued to push for private sector to do what it can also. That message remains out there, exactly so that countries have the fiscal space at this time of urgent need. On what's happening in Cabo Delgado, it is, of course, something that's of great concern. And elsewhere in Sub-Saharan Africa, we have seen, insecurity in one country left untreated, spilling over and impacting. Here I'm speaking, of course, of what's been going on in the Lake Chad Basin with Boko Haram, but also, the insecurity, the security challenges that rose in Mali, spilling over into Niger, now Burkina, and big swathes of the Sahel. So absolutely, I think trying to find the solutions to dampen this threat is going to be very, very important, both for Mozambique, but also neighboring countries like Tanzania.
Thank you, Abe. We also have some questions coming to us online. And there is a question on Mozambique, as you were speaking on this now. So this is a question from Aderito Caldeira, who is from Journal Verdade, and he is asking, will it be possible for the IMF to start a new finance program with Mozambique under the extended credit facility before the end of the COVID-19 pandemic? Thank you.
I don't see why not. I think the authorities have expressed an interest in such a program, and we're very happy to initiate discussions with them. Again, our engagement and support for countries this year is, of course, one of a very rapid financing nature, but we do want to work with countries also to foster a stronger recovery as possible, and that includes with Mozambique.
Thank you, Abe. The next question is also now through WebEx. It's Matthew Lee who wants to ask questions. Matthew, do you hear us?
Thanks a lot. I wanted to know, I saw yesterday the announcement of continued disbursement to Cameroon, and obviously it's a country in a lot of need. But there are a lot of issues that have arisen, not only about human rights issues and the refoulement of people that have fled the country due to conflict in the northwest and southwest, but also some alleged corruption in the distribution of COVID-19 aid. So I'm wondering if you can kind of, as you can say, how do the general principles of ensuring that this aid actually helps people, how are they implemented generally and specifically in Cameroon? And just finally, in Côte d'Ivoire, there's some controversy around the possible third term of your alumni, Alassane Ouattara. Without getting into the politics of that, what's been the impact of the pandemic on Côte d'Ivoire, and what are your views on its prospects going forward? Thanks a lot.
Thanks. On Cameroon, of course, conditions remain very difficult socially, economically as a result of the pandemic. And yesterday, actually, we went to the board for disbursements there. On almost all of our operations with countries that we've been doing in the context of the rapid credit facility, we have been asking the authorities to, number one, explain what the resources are being used to, and then number two, use their institutions, and if the institutions are not strong enough, external auditors, to show that those resources have been used for the intended purpose. I think already, and also, a third element of this is that beneficiary owners of the companies that are being awarded contracts are published. So already, yesterday there was some reporting. If you look at the staff report on Cameroon, on the on how the resources from the first disbursement were used, and also, of course, the beneficial owners of companies for those benefits. So there's already some reporting, and this is something that we're working diligently to get into the public information. We strongly believe that not only is governance important, for country's benefit, but also what we can do is bring about a lot of transparency in terms of how resources are used. This is a core function that we do through our work in helping strengthen countries' public finance management systems. But at a time like this, I think when resources are being provided quickly, it's really important also that there is transparency in how these resources are being used. We want this information to be in the public domain so that civil society organizations, anti-corruption agencies can all scrutinize how these resources are being used. And this is an area of work we are very, very diligently following on. And that's our contribution to making sure that there continues to be improved governance.
Great.
Cote d'Ivoire, the WAMU region more broadly has seen, even within the African context of limited infection levels, the WAMU overall has seen even lower, at the low end of infection rates. So in terms of the direct infection numbers, even controlling for testing being low, it seems that the number of COVID cases has remained low. So that's very encouraging. And we've also seen overall in the WAMU, fairly strong somewhat stronger economic outcomes than elsewhere in the region, on account of a bit more diversified economic structures that countries have. But again, even there, we're looking at, very anemic or even negative real per capita growth rates, including in Cote d'Ivoire. So the conditions remain fairly weak, and they continue. Much of what I was saying earlier, the policy challenges remain as challenging as elsewhere.
Thank you, Abel. Next question goes to Simon Ateba. He's from Today's News Africa. So, Simon, do you hear us? Please go ahead, Simon. We can't hear you.
Simon,
we hear you.
From Daily News Africa in Washington, D.C. We are seeing instability in Nigeria right now. There are mass protests everywhere. People are protesting against not just police brutality, but also unemployment, poverty, and we've seen other instability in Ethiopia. I don't know if you can, I was wondering if you can comment on the Nigerian economy and how this instability and protests will affect the economy, and whether you also anticipate such mass protests to expand all across Africa. And finally, I was also wondering if you can comment on the impact of the debt African countries have received during this pandemic, and if you are satisfied with the money that has been used so far. Thank you.
Thank you, Simon. So on Nigeria and the protests, I mean, it's of course very difficult for me to comment on, not suffice it to say that economic conditions in Nigeria, of course, for the last 4 years or so have been very difficult. In the wake of the decline in oil prices in 2015-16, since then the growth has been quite anemic. There's been a lot of pressure on standards of living. So there has been this dislocation, and as always, when you have these kind of economic difficulties, social protests are not uncommon. I think this is exactly why we've been, on the record in Nigeria about how really critical it is to get all of the policy-induced barriers out of the way to facilitate stronger economic growth, for the government to do more to raise revenues, to be, from non-oil resources, to be able to invest in health, education, which would allow people to be more successful at getting jobs, but also improve the economy's potential. So I think that development agenda that Nigeria has, has to be tackled with gusto and vigor, so that the millions of jobs that the country needs can be created. And I think that agenda remains very pressing. On overall the debt issue, I'm not sure if you're referring to the lending that we've been providing or the level of debt pre-crisis. I think I addressed that, the pre-crisis level of debt earlier, but in terms of the money we've been providing this year, a core function of the IMF, of course, is that when countries no longer have access to the usual forms of financing that they have, development financing or private market financing, IMF is the one that steps forward. And at a time of crisis like this, it is the raison d'etre. It's why the IMF exists, to come help countries, sovereigns in distress, while they are correcting their economies to go back to normal forms of financing. So the financing we've been providing is critical. It's an important lifeline. What we're asking countries to do is that show that these resources have indeed been used to save lives and livelihoods.
Thank you, Abe. I think that answers the questions. Now we have a go to the next question, and this is for Alonso Soto. He is with Bloomberg. I think he has also a question on Nigeria. So Alonso, go ahead.
That's correct. I just have a quick follow-up and then a few other questions. The quick follow-up on Nigeria is just I want to understand if the demonstrations can affect the fund's projections for this year and next year, economic projections for Nigeria, and how do you measure that impact? What are the factors with these kind of demonstrations that the fund will look at? And a couple of other quick questions is, I wanted to see if you can give me an update on the situation in Congo, Brazzaville. The government yesterday said that it planned to settle about 300 billion CFA franc in domestic debt. So I'm wondering, what is the status of the conversations with the fund and the country, and also the renegotiation of its debt with trading houses? And just one final thing, I'm wondering if the fund has any projections for debt relief to Sudan if the country is indeed removed from the terrorist list by the United States.
Thanks, Alonso. On the growth projections in Nigeria, I mean, these protests happened, of course, after we had closed after the period where the data we looked at in making the growth projections for this economic outlook. And much will depend really on how these protests evolve. Lagos, of course, is a very important economic hub and contributes quite a bit of economic activity to overall Nigeria activity. So if these persist and are showing significant effects on economic data, we will internalize them in due course. On the Republic of Congo, discussions are still ongoing on how we can provide them with rapid credit support. The barrier to this has been really the debt sustainability situation. In the wake of the decline in commodity prices in 2015-16 and oil prices, of course, debt was unsustainable. They were in the process, they had initiated discussions both with official bilateral creditors, but also oil traders, to get a haircut that would allow debt to be brought back to a sustainable level. Those discussions are still ongoing, unfortunately, and there is no resolution there. And now, of course, in the wake of the pandemic, it's even more pressing that Congo creditors provided the required debt relief, and we'll be working as hard as we can to facilitate those discussions, and also once that goes through, try and find a way to support the country. Sorry, I'm very sorry, but Sudan is actually in our Middle East department, so I'm not briefed on it. But we can get back to you with an answer to your question, Joe.
Okay. Thank you, Abe. I think there's one more question on Nigeria. It's coming from the, just a second, the name was Nume Ekege, and so he is also joining us through WebEx. Please, Nume, go ahead.
Okay, hi. My question is still on Nigeria. You mentioned earlier, someone had asked a similar question, what I wanted to ask on growth projections on Nigeria. But however, is this something of concern? Because I think we're just saying how it would affect the country's economy, one. But it's also IMF looking at the funding they've been funding towards Nigeria, and if it's been directed to a wrong use, especially now that there are reports of of protesters being harmed by the government?
So, I think I answered the question on the economic effects earlier. It's too soon for us to know the implications and internalize that. Are we concerned? I mean, of course, we're always concerned when we see protests, particularly ones that are difficult, like the ones in Nigeria at the moment, but also anywhere in the world, right? So, we hope that there will be a satisfactory resolution there. And as for the support we provided Nigeria earlier this year, I mean, again, this support, of course, is to help to try and cushion the awful effects that this pandemic and the economic crisis that has unfolded has had on Nigeria. It's led to a massive decline in tax revenues, important need for the government to spend resources on health, education, and other important areas at a difficult time like this, and that's what the resources were intended for. And I think the government has committed to both provide us with an explanation of what the resources have been used for, and audits of how that has been used in due course, and we look forward to that in the coming months.
Thank you, Abby. I think we have still some time for a couple of more last questions. And I'm switching now to the online questions that journalists are submitting us. And there is one on Zimbabwe from Clemens Machado from Industry Focus. And the question is, what's your view of Zimbabwe's currency migration from the US dollar to the Zimbabwean dollar? And how can the country help ensure its currency? Thank you.
Okay. Thanks. I think we, of course, recognize the reasons why the government decided to do this change. But I think fundamentally in Zimbabwe, what's really needed is a period of very strong reforms that will facilitate a dialogue with the country's international creditors, but also domestically to make sure that there is, consistency in policies in the monetary sphere and the fiscal sphere, so that there is confidence in whatever currency the government is using. Absent that confidence that the government policies are coherent and there will not be a reversion to the unfortunate periods of hyperinflation that Zimbabwe has suffered through, whatever arrangement there is will fail. So it really is about the credibility of the whole policy framework that is at stake, and that's what needs to be worked on in our view. And frankly, also there is a role for the international financial community to play, particularly at a time like this when humanitarian support is of importance. And I think those two will help move Zimbabwe forward.
Thank you, Abby. So I think we can take the last question, and we are going back to WebEx. George Viafe from Ghana. He has a question, I think, on Ghana. So, George, go ahead.
So, can you hear me?
Yes, go ahead, George.
Okay, so my question is that in terms of what are the threats to the Ghanaian economy going forward? We had some shocks from COVID-19. But going ahead, what are the threats to the Ghanaian economy? And is the debt still an issue? I know that we are being classified as high risk of debt distress. What's the situation now? Are we improving or things are getting worse, please?
Thanks. So, Ghana, of course, faces quite very significant challenges on its economy. After the difficulties of 2014-15, there had been a period of quite strong reforms and consolidation, and was on a reasonably good trajectory. But of course, the pandemic has come and really shaken the foundations of Ghana's economy as it has much else. This year, the policy response has been very supportive, as needs to be the case. But going forward, it will be very, very important to make sure that that policies revert back to making sure that there is a much more of a focus on keeping debt stable and bringing it down gradually. So I think much will depend on how quickly this policy recalibration takes place. And given how high debt levels were in Ghana, I think the quicker that's done, the better. So I think the government is of the same view, and effecting those reforms will be of paramount importance. As you know, in all our conversations in Ghana, in our comments in Ghana, we've been saying, it's really important that we strongly supported the government's vision of, as the president has been saying, Ghana beyond aid. That's absolutely the right vision. And of course, that aid has to be replaced by tax revenues and other permanent domestic sources of financing rather than debt. And so effecting that transfer is really what's going to be key. And we'll be working with the government through the Article 4 process to provide technical advice, whatever the government needs. Thank you.
Thank you, Abe. And just to conclude, there is one last question that came in, and there is a question on the difference between the global financial crisis and the pandemic in response that African countries had to make. So what can you compare those?
I think that's a very, very good question. In the context of the global financial crisis, we actually saw quite a lot of resilience in Sub-Saharan Africa. The region was not as hit as badly as it's being hit now, and there are several reasons for that. I think first and foremost, except perhaps for South Africa and a couple of other countries, the extent to which economies were integrated into the global economy was much more limited in 2009. And the crisis was much more of a financial crisis. So the spillovers into Africa came through commodity channel, and that was short-lived. So most countries actually survived the crisis much better. Second, countries' debt levels at that time were much lower than they are now. So the countries were able to have quite a big swing in fiscal deficits to cushion the effects of the slowdown in the global economy in 2009-10. I think, come 2020, the crisis, of course, is really incredibly profound one, a really brutal crisis, shock to the region, coming through many, many channels, commodity channel, but real economy channel. If you consider what's going on right now in small island economies that are tourism dependent in the region, countries like Seychelles, Mauritius are seeing contractions in their economy of the order of 15-16% this year. Huge hit. So the crisis this time has come through many, many different channels, and really is much more pronounced one than the 2009, coupled with the fact that many countries have limited fiscal space, limited additional debt-bearing capacity. That has complicated the policy response that policymakers are facing, and is calling for much more of trade-offs and much more difficult policy discussions internally. So I think those are the key differences between 2009 and now.
Thank you, Abe. So I think we are concluding now the press conference. Thank you, Abe, for joining us and presenting and answering all the questions. And thank you for reporters joining us via WebEx and online submitting of questions. We still have some more lined up for you, for the reporters. At 1 p.m. today, there is a press briefing on the Western Hemisphere. So stay tuned for this. We are finishing it, and stay safe and stay well.
Stay safe. Stay safe.
Thank you.
Thank you, Gediminas. Thanks, sir.
Thank you.